fourth video, we provide 3 more answers to the question, what will I do with my land to make money? Let's start with option number 3. Don't sell the land, just lease it out. Raw, undeveloped, without any improvements. The lease rate will be comparably low as your tenant or lessee will still need to invest heavily on building on your property before they can themselves generate income from the developed property. Leases like these are normally long-term to allow tenants to recover their investments in building on your property and making more money off it. 25-year lease terms are common, some shorter, some even longer. The duration is negotiated by the tenant with their investment on it in mind, and they need to break even or recover their capital and also to earn profits from it. From previous lessons, we learned that in selling, the land value is hinged on the benefits, utility, or usefulness it provides. The same is true when leasing it out. To get the best price for it, you need to determine what could be the best use for it. There are many options. Let us mention a good sampling here of what tenants could use for your land. Moving on to option number 4, lease it out but build on it first. This way, you can charge a higher per square meter lease rate, and you can even increase leasable areas. Higher rental rates can be had because you're no longer offering empty raw land but developed areas with walls, floors, roof, and amenities. You can increase leasable floor areas by building above ground or even below ground. Leasing out properties generates more or less steady income. Cash inflows are recurring. Wouldn't that be nice? To have a cash cow? Cows do need to be taken care of though, else you won't have milk. Buildings need to be cleaned, secured, and maintained. Those need recurring costs too. The good thing is you can have your tenants sharing those costs. You'll charge KAMSI or KUSA. What they are will be covered in a future lesson on property management. These contracts between you, the property owner, and the tenant can be for a period of a year or more or less. You can ask for rents in advance and for deposits. You can also include provisions on rate escalation or lease rate increases. Again, to watch the lesson on commercial leasing. The fifth and last option is just to hold on to the property. Do nothing. That can be the easiest option, to do nothing. Land ages like fine wine, they say. Its value should get better with age. Population grows, demand for land grows with it, supply diminishes. The law of supply and demand governs. Yes, eventually your property will appreciate in value. In the meantime, be aware, there are what we call carrying costs. Landowners are required to pay real property taxes annually. If your lot is within a managed subdivision, you need to pay dues for upkeep. Otherwise, you yourself will have to do your own upkeep. For this last option, you'll still make money, but after a long time. This option is for those with other sources of income. A big advantage of these last three options is that you retain ownership of your property. A key real estate lesson is this: land is finite. Mark Twain is quoted to have said, "Buy land, they are not making it anymore." Now, to summarize, we provided 5 major answers to the commonly asked question, what will I do with my land? You can hold on to it, you can lease it, or you can sell it. You can lease or sell while it's in the raw form, undeveloped, and unimproved. Or you lease it or sell it after you've invested on improvements or developments on the land. In future videos, we'll discuss each specific product type or use in more detail. For say residential, commercial, hotel, industrial, office, etc. Hi, this is Dan Moore of My Real Estate Goals. I hope you liked the video. Thank you for watching.